Hey Seth, we're getting a lot of questions about Roth conversions. What are those?
That's a great question. So most people have IRAs, 401ks, 403bs. All those mean the same thing. It just means pre-tax money. And the government does not care whether you're alive or dead. At some point, somehow, some way, you're going to pay taxes on those IRAs. A Roth IRA is an account that you never have to pay taxes on ever again. Not the dividends, the interest, the profits, none of it. Roth IRAs not only would be tax-free for the rest of your lifetime, but a spouse's lifetime and 10 years after you pass away. So a Roth conversion is simply just trying to get money that's pre-tax now into a bucket that's not taxed ever again. And then the art comes down to, or the science, is should we pay those taxes now to flip one to the other? And that's a complicated question. That's why I need to see the tax returns, and I got to consult with the CPA, and we really need to focus on what your long-term goals are and not just look at the money in a vacuum.
So why is a Roth not taxed?
So the government tries to incentivize people to save for retirement. And they give you two basic options. One is all those pre-tax things where if you put the money in now, you get a tax deduction, but you have to pay taxes later. The hope is that you're in a lower tax bracket. The other option is a Roth. All a Roth means is that you don't get the deduction now, but you don't pay any taxes ever again on any of it. Now the government wants to be able to tax you, so there's limits as to how much you can put in both of those vehicles, but we're allowed unlimited conversions from one to the other.
So because it's so individualized, is that why you want to see people's tax returns when we're talking about Roth conversions at the end of the year?
Absolutely. So as a part of the financial planning process, there's a lot of reasons that I'm asking for that tax return, but one of those reasons is conversions. And we keep a running list of all of our clients that it might benefit. And so around November, we reach out to several dozen families every year and collect extra information for that year for me to work with the CPA to see if it makes sense for them.
So in what scenario does it make sense to do a Roth conversion?
Oh, there's a ton of different people that it could apply to. One of them would be younger people, and specifically younger people that make under $100,000 or $110,000 a year. They have a high probability of it being helpful for, or high income people that are just under $400,000. It could make a lot of sense for them. So one of the biggest groups of clients that we could add value for are people that are considering retiring before 65, so that we can structure their money in the best way to get them the best health care possible for the best price.
Okay. Now is there a certain time of year that this has to happen?
Typically we do the calculations every November, and so that's why it's really important that when we call clients for their tax returns, they give them to us. A better practice is that every year when clients finish their taxes, they send them to us in February, March, April, so that we're not kind of hounding them at the end of the year. But we do these calculations at the end of every year because that's when we know the most information for that current year for the client.
Thanks for explaining that. Now that I know the why, I can explain that when clients call and want to know too.